Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are in a rare weekend video, heading into the week of Monday, September 13th. So I want to take a recap of what happened on Friday, September 10th, and then go ahead and sort of get an update on the daily chart that we've been watching. And then I actually have a little presentation to go through that'll give us sort of like some additional data to think about for the week ahead, but also to just kind of recalibrate ourselves. It can be a little bit taxing on the system, I think, when a lot of people have investment positions or longer-term positions in a stock, yet we go in and dissect what's happening every single day, which in the broader scheme of things, most of those days won't ever matter. But by its nature, you can sort of get into a you can't see the forest for the trees kind of situation. And so I wanted to take a step back and sort of recalibrate ourselves to that. So starting things off with Friday, so this is what Friday looked like. This again is the gap that I was hoping that we were going to come up and fill. So as you see at this point, we've closed below the gap. So this is starting to trigger some sort of alarm bells for myself, for my shorter term positions, to say, okay, if we're not going to go up and fill this gap, and we're either going to be a little bit range bound for a while, aka trade sideways, or sell off more, then I'm going to be very aware of that for my shorter term positions. We'll talk about that more on the daily. But basically, as soon as open happened on Friday, SoFi sold off pretty hard for the first hour of the markets, tried to make a run several times at the VWAP and just couldn't ever reclaim it, and then sold off again into close here. So ultimately coming down quite a bit on the day, actually, coming down 2.55% in the red. So just one of those days where it couldn't ever get any traction, even though it made several attempts at reclaiming the VWAP. And so it goes. On the daily chart here, we see the MACD here starting to curl in a little bit and topping out similarly on the line to where we were before, just falling just short of the baseline. And so that's happened now twice in a row. I don't know that it won't pick up again and cross over the baseline, but it's having a really hard time these last couple of attempts getting over the baseline. And this was at on the 12th of August, as you know, and then so we're about a month away from that. At this point, we're trying to make another attempt at the baseline. So it's not like it's a tiny amount of trading days trying to attempt the baseline, but that's just sort of the nature of being caught in this very much overall bearish downtrend. Now continues to slice, this 50 MA continues to slice through the most recent daily candles, and that 20 MA, as we've been talking about, is just not curling up toward the 50 at all. So not making any bullish movement there. So I'm really watching closely this MACD, watching closely if we continue to fall out of the gap here with a full body of a candle. It'll be pretty tight in at this point to even keep support at that 1502 if it does dip down any further, but we'll see what happens. But this blue line here is 1502. That's the first support zone that I have. Below that, it looks to me like 1411 is the next best level of support still. And then to the upside, if we do get some push through this gap, 1629 continues to look like its resistance, as you see here. And this gap, though, would bring us to about 1673, 1675, somewhere around there, if we can get through it. So I have to see, take it day by day as these things go, but if this MACD turns bearish, already being this far down in the gap, or even out of the gap at this point, and obviously then we can't hold the gap, then that would tell me I would seriously consider closing out my shorter term positions, still keeping my longer term and adding to it on dips. But the short terms for me are looking a little bit in peril at the moment, but that's okay. Now on the presentation side of things, let's take a look at what's going on, because there are some things happening in the market. Whoops, we started at the end. So now you know how it ends. Oh no. All right, so let's flip up through here. Get to see everything in reverse. Okay, so my micro and macro data. So a clean look at the daily chart. So that daily chart that we were just looking at, this is just a little bit of a cleaner look. So these are the downtrend forces that we're under in blue. This one taking in the tops of this trend down, and this is the longer term trend down. And so you see at this point we're very, very far away from any of those things coming into play. And in the near term, we have these purple slight uptrends, and this green we have what I think is our most important level of like support and resistance cutting through the entire chart. Most important level for the near term, I should say. But this to me, sometimes there's value in just having a little bit cleaner of a look at these things. Zooming out on the weekly chart, you do see this wedge forming. And so this would be interesting to see, but this isn't going to play out until like January of 2022 down here if we continue in this area. Now, the other thing to consider is this 1506 to the downside and then 1896 to the upside. On a weekly time frame, these are constant support and resistance levels, right? Flipping between them at several points. And so to me, it wouldn't be shocking if until we bust this wedge that we trade sort of between that 1506 and 1896 range. We'll have to see. Insider activity, you can pause. I don't want to sit here and just read this at you, but if you just want to sort of have a refresh of what's happened, I think that I captured the most recent stuff, but if there's anything missing, feel free to comment below. But just look at 4 purchases here and a couple of sales. This is from like the larger reported. These aren't obviously like the unlock and the sell-off that we saw at the end of June. A bunch of smaller type sells. But you see the value here, right? But like I said, having gone through this before, I don't begrudge these sales in any way, shape, or form, because like this person could have sold this to buy a house. There was a lot of people at the startup that I was in that went public that they were there holding onto their stuff because this was a plan for them, right? This was a plan for taking several years off. If everything worked out, this was a plan to buy a house, so on and so forth. So these are sort of like the stakes that people have in these things, and they should be able to realize those dreams that they work hard for. Institutional situation, here's the holdings that we have just as a refresh. This is from the NASDAQ site, so just check there if you want. And then 118 new institutional holders, and this is the data that NASDAQ has there as well. Again, just to recalibrate ourselves, because it can be a little bit challenging, I think, to be taking a longer term view of a stock, meaning we're going to be tracking SoFi for a long time, but then being just sort of like fluctuating so hard day to day, because it can go up and it can go down dramatically from day to day, and it can be boring and move sideways for a long time too. The short interest, as Ortex has it at this point, Friday we came up a little bit, but still sitting under 7%. So to me, not a big deal. Utilization still quite low, so they could come in heavy if they want down the line. Just something to keep an eye on, but nothing to be freaking out about at the moment as far as I'm concerned. The other macro forces to consider: the Russell 2000 growth ETF that we have here. Now this is trending slightly downward, right, over the course of several months now. And we do see the MACD here, a nice push, but now is curling down and it looks like it wants to move bearish again. So we'll see what this does for the Russell small caps. And then with the QQQ, the thing to look for here, I think, is this 120 EMA on this daily chart. It's caught support here, 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 here. And now if it does come down for support again in the near term, I don't know if it will. I just know that there's a lot of people worried that the market is going to dip. I don't necessarily know why, but there's always reasons why. But to me, this EMA would catch support in the 350s probably. If it does come down a little bit, it might scoop down a smidge, but I would keep an eye on that EMA 120 on the QQQ if the NASDAQ starts to dip. ARCK, Kathy Woods, ARCK, the innovation sector or fund, I guess you can just call it the fund, but it's coming in to actually in a wedge of its own, and also has topped out pretty consistently recently since like March since March at this 131 level. So this wedge coming in is going to bust in October. So it'll be interesting to see what happens here with that. But that could also overlay some of the growth sector and growth stocks and how they're coming into play, and the degree to which they are impacting SoFi, how SoFi is going to move, kind of being in that same bucket. The VIX, which is the fear index, one thing to watch here is while we are in an overall downtrend, as you would imagine, since the craziness of last year and even the craziness of earlier this year, if you remember that big sell-off, especially in growth, that got crushed really hard February and March. So we're overall trending downward. Again, VIX tracks fear in the market. So this is not meant to treat this like it's a stock, but this is tracking an emotion, sort of. And that fear has been trending down, so that's good. That means that people are comfortable taking positions, investing their money, and that should help stocks go up. But since about July, late June, early July, we have seen the bottoming out of the fear rising. So fear, the lowest fear that people seem to be having is higher week over week over week over the last few weeks. So something to be aware of. And again, if it stays in this range, this will pop probably one way or another mid-November. So it'll be interesting to see what happens there. So as we mistakenly started off this presentation, good luck this week. Again, this isn't meant to say anything major is going to happen in the markets as a whole. This isn't meant to say the VIX is moving one way or the other. I think it's just good to have the information and sort of revisit it from time to time to not get too bogged down and lost in the weeds of a day-to-day situation, especially if you have even longer term swing trading positions, which I have. I have short-term positions in SoFi, I have longer-term swing trade positions, and I have longer-term investment positions. So those are my three categories. So I span all of them, and it can be just really distracting sometimes to focus heavily on day-to-day activity, especially if you're considering longer-term swing trades and investment sort of situations in your portfolio. I don't know why I can't think of the right word there. But anyway, I hope that you have a great week ahead no matter what you're trading. And as always, I appreciate you watching, and I will see you in the next video.